Wall Street is pointing toward another down day, with global markets falling sharply on more bad inflation data. The S&P 500 fell 0.4%, the Dow Jones Industrial Average fell 0.5%, and the Nasdaq was little changed. The Labor Department on Thursday reported that wholesale prices soared 11% in April from a year earlier. That follows a hot report on inflation at the consumer level on Wednesday. Meanwhile, investors continue to worry amid such market volatility. But should that prevent them from taking risks in the stock market? Well, joining us now to address that question is Mr. Thomas Caldwell, Chair of Caldwell Securities Limited. Sir, welcome back to Forum Daily.
Thank you, Nima.
So volatility is a word that we use on a daily basis now when we talk about the stock markets. But do you see an end to market volatility anytime soon, Mr. Caldwell?
Never. Volatility is a fact of life. Volatility is caused by real events and very often exacerbated by the pro-trading community. A little bit of negative news, they will actually jump on it. And even ETFs can add to volatility. Usually they're the net buyers, but when markets go down, they must liquidate. They can't be subtle about it. They have to sell. So the structures of capital markets add to volatility, but that's going to be the name of the game. And actually, you can use volatility. If you like a position or like a company, have an interest in it over time, and you see it really taking a downdraft, the big question is you have to discern that downdraft. Is it fundamental to the company or is it market induced? And very often these days, it's market induced. Therefore, from a fundamental point of view, it's providing an opportunity. You can use volatility, but volatility, I often say, it's like taking a saw, the blade of a saw, and turning it at an angle. You're going to have the saw teeth and you're going to have the angle of the saw. One is the volatility, the other is the trend. So you really are trying to discern, take the volatility out of your equation for a moment and try to see what angle that saw is pointing to. And that's the key thing in investing and looking at volatility.
All right, sir. Well, we all know we need to buy low and sell high, but this is not what investors typically do. Why is that?
Of course not, because people want the affirmation that everybody else is doing the same thing. And oh, this market's on a run. People are making money. I can get involved, and it's the getting left behind, not being included. So people tend to run toward the top of the market, and then when it goes down, it feeds on itself. Nima, as you know, I've said many times, the biggest enemy to investors is their own emotions, and their emotions go with the herd. That's just the way it is. I tend to be a value investor. I like to buy big companies if I can. And the only way I can create additional value is to purchase them during periods of adversity. My job is to discern whether that adversity is permanent or whether it's temporary, whether the company will survive, and this is indeed an opportunity. Generally speaking, with well-run companies, it's an opportunity.
All right, sir. Well, we're hearing a lot of people talk about risk right now, considering current events, but a lot don't realize just how important risk and containing risk actually is. Can you unpack that for our viewers?
Well, sooner or later, you have to look at risk, because if you don't think about risk, it's thinking about you. So one of the things, the smartest thing I think I ever did when I started our firm 40 plus years ago is no margin accounts. That is, you have to take the precautions before events happen. No margin accounts. I don't think people should borrow money to buy securities. So that saves a lot of aggravation. I mean, it's one thing to be down 10 or 20% in the market. It's another thing to be wiped out when you're highly levered. A lot of the newer investors over the last several years were highly levered and has lost a lot of money. Robinhood, the share price of Robinhood shows you what's happened to those retail investors. So very simple things. Don't get levered up. Don't get caught up in a trend. And when everybody's euphoric, be a little bit cynical. And when everybody's negative, be a little bit optimistic, because an optimist looks at adversity and tries to see the possibilities in those adversities. But risk is always going to be with you. It's how you handle it. And you certainly can't handle it with emotions, whether they be greed or fear.
Some good advice there, sir. Now, on that note, can you tell us a little bit more about the importance of seeking expert advice, especially during such turbulent times?
Well, quelling your emotions being the game, okay? I always keep joking that I haven't had an original idea in years because I live off of the team around me, maybe the genesis of an idea. I hear something, we talk about it, we bounce it around, and it also helps me to quell my emotions. Even when I was a pro trader, the traders around you, you could be offside, you were down a whole bunch of money. Oh, don't worry about it. It helps you to moderate. So I guess in quelling your emotions, generating ideas, refining ideas. I always keep joking. There are times when I'm like King Kong, I'm invincible. And there are times I should not be downtown with more than $10 in my pocket. I just have to know the difference. So my point here is, if I was smart all the time, I wouldn't need all my partners. I can let everybody go and take all the money myself. But the point is, I have to, as I said in the old song, I get by with a little help from my friends. And if you think you're going to make the decisions yourself in your furnace room, you're kidding yourself. That's arrogance. And markets have a brutal way of dealing with arrogance, because you need to refine ideas and bounce it off. And a pro, so the only way you can filter, look through ideas and adversity, when you quell your emotions, and that is with experience. So if you can get that, that's worth it. And whatever that costs, pay it, because I pay all these people around me to help me to think better and make better decisions.
Always an informative conversation, Mr. Caldwell. Thank you again for your time today.
You're very welcome. Thank you, Nima.
We'll be right back.